Okay, so I've been asked by a few friends to explain what this whole Robinhood, Gamestop, everything thing is that's going on right now. And I am not a financial advisor. This is not financial advice. I'm not providing anything other than my observation of what I've seen and what I've read into. About a year ago on the Reddit forum Wall Street Bets, you had this guy come on and say, hey, check out GME, GameStop. And over the course of the year, I saw a couple times I went and looked at Wall Street Bets because I saw them pop up when I was looking at Hertz. Hertz was getting traded heavily even though they were bankrupt or in bankruptcy, and a whole lot of movement was going on. And there was a lot of talk at the time about retail traders, everything from middle schoolers or buying stock and during class and stuff like that. So the fast forward now to a week ago, right? And really this started long before then. There's been people in this since October, and but if you go back about a week, GameStop starts going up. So what's happened is you have this company, Melvin Capital, and there's other companies that do this as well. They're hedge funds, and basically what they do is they bet against stocks. They short stocks. Well, they shorted more of the stock of GameStop than even is in existence, somewhere around 140%. I've seen different numbers. But they sold more stuff than there was. They sold more GameStop than there was to sell, expecting to be able to buy it all back at a profit and cover and basically bankrupt the company. Is potentially what could have happened with that. So instead of that happening, a bunch of people, some with money, some with less money, everybody with the ability to buy a couple shares or a couple million shares or whatever they bought, all got together and decided, hey, we're going to buy this stock up. What happens when you do that is when the stock's not available in the market, now these companies that have to buy it back can't find it, and they have to pay more for it. And because there's all this buying, the price goes up, and demand drives the price up. And now all of a sudden, instead of buying for 20 what they sold for 40, which I'm not going to try to teach you about shorts, but that's basically it. Instead of buying for 20 what they sold for 40, they need to buy it for 60, 80, 100, 150. As this happens, the banks start coming to them, or wherever they got their money from starts coming to them and saying, hey, you owe us interest on this, and you need to cover some of this difference because we need to make sure that if you go out, we don't lose everything. So you need to cover this, or else we're going to close you out right now and take your money. And so they have to cover these positions or buy the shares, but the shares aren't there, so the price keeps going up, and it's creating allegedly what's called a gamma squeeze, basically, or a short squeeze. But then there's a gamma squeeze beyond that, which I still need to read more of. And what that does is just crunch even more into these companies that have to buy these shares because they have to pay more and more and more for them because they're just not available. Now what's happening is people need to hold the shares in order for this to work, right? And so all these people who have kind of independently decided they're going to do this based on what they're reading have held on to their shares, most of them. And then they woke up this morning, and so GameStop's been going up. It went from, 40 something to 60 something to 80 something last week, and then this week it's jumped up as high as 350, 430 it might have been at one point. It's all over the place, but it has jumped. And you see this, all the conversation that's gone around this and all the press that's gone around this has staged kind of this big obvious battle, which is why people who have no interest in the stock market are paying attention to this right now. And it is pros versus Joes. It is, however you want to word it, the big guy versus the little guy, David and Goliath. And David basically slung a pretty big rock to the tune of $2.5 billion. So that may not be the exact number, but that was the buyout of Melvin Capital, which I mentioned before, who lost all this money because this is going on. They got bought out by another firm, or a couple other firms. One of them was Citadel. Citadel does about, a big chunk, depending on the reports, of Robinhood's business because they pay for the data from Robinhood on what you're buying and selling, right? So, and most Robinhood traders, who are at this point where they're playing this game, no one understand this. They get like, all right, you guys are selling my data and I get free trades in exchange. But when for a big chunk of your money comes from one place, they also have influence. And Robinhood this morning shut down trading in Gamestop, AMC, BlackBerry, a couple of other stocks that had been kind of shouted out and talked about heavily on Wall Street bets. And so by preventing people from buying any more of those stocks and only allowing them to sell, it creates the dual effect of blocking any buys. So you can't buy. If you got an account somewhere else where they'll let you buy, you could buy there, but if you don't, you have to open that account. It takes 3 to 5 days. You have to fund the account. That takes 3 to 5 days. It would basically be a good strategy to buy time, right? So what you have instead is Robinhood cut off the sales. So you can't buy anymore. But you can sell. And that creates a panic. And then, of course, you see the shares start dropping because people can only sell. They log on, they see they can only sell, and I better get out now. And not a bad move today necessarily because the stock is down because you can pretty much only sell it anywhere. There's a few places you can buy it. Look them up because they change every 5 minutes. But pretty much everybody that's in these forums is just saying, look, just hold, just hold, just hold. Because as time goes on, as long as this stock stays well over 40, these hedge funds are going to get pressured further and further to just buy out their positions, and that's going to drive the shares up. There are all kinds of astronomical numbers that are getting thrown out there. It's really more about seeing how long this lasts against the time that it's taking for the companies to figure out how to get out of it. And you're seeing everything you see on the news, on financial news, just understand that's bought and paid for. So I hate to fake news this thing, but you do see that going on too. So just do your own research. Honestly, at this point, if I was a financial advisor, I'd probably be wise to say stay out of it, but enjoy the show. And for those that are in it, to the moon.